Hey guys, I try to keep my videos fun, informative, entertaining, and short for the most part. But what's happening right now in our economy and with the Federal Reserve System is none of those things, unfortunately. If you watch the news at all, you probably saw that two large banks have failed over the weekend. And obviously it's not a good thing, but what does that mean for you? The Federal Reserve has already decided to step in, it looks like, and is going to just continue the trend that we've seen, in the last 10 years. Anytime there's a problem, the way we solve it is by printing money. Inflation is what got us to where we are by printing money. So anytime that we have to print more money, I don't think it's necessarily a good thing. But at the same time, the feds have to insure these banks. They're FDIC insured banks, and they have to make sure the deposits of these people are protected. So them printing money in this circumstance is just replacing money that has been lost. It's not like it's pumping money into the economy like we saw with the PPP loans and during COVID. So I don't think it's going to affect inflation as much. That being said, it's pretty obvious at this point that the raise in rates to stop inflation has caused our economy to get to a point where banks are failing. The only thing that can be said here that's pretty much a positive at this point is nobody in America wants to be Jerome Powell. He's the head of the Fed. He's in a tough, tough spot right now. Everyone in the industry that I've talked to can only guess that the rates are going to just go down at this point because our economy can't sustain it. That's a good thing for you as a home buyer for the most part. The market's going to start to pick up. You're going to have a lot more competition, but you should see the rates going down. So here's what you need to know. We're starting to get into an environment where rates are improving. Today was one of the best improving days in rates that I can remember in quite a while. We got back a ton. So if you're locked anywhere right now above like 6.1, 6.2, you need to give me a call. Your lender is definitely charging you too much. You should not see any sevens anymore. We're back into the sixes. We're getting into the fives for some people, which is a really positive sign for our real estate market. Also, we don't know when it's going to stop. We don't know this is going to be 5, 6, 7 days of better rates. So if you are not working with a lender that has a float down option, you're going to be in a bad spot. You want to lock so you're protected, but you also want to have options to get that better rate when it comes about. Here at My Community Mortgage, we protect you. We offer float downs. We allow you to switch investors. We're not going to let you lock in at a rate and have the market improve the entire 30 days you're in the contract and not give you the benefit of that. There's some huge lenders out there, Rocket Mortgage for one, that once you're locked in, there's no float down policy. So if the market improves for the entire 30 days that you're under contract, you have no benefit from that. So right now, what you should be doing is one, if you've been thinking or if you're on the fence, it's time to get back in the market. These rates are coming back. And number two, make sure whoever you work with, hopefully it's us, ask them about their float down policy. Protect yourself because we're going to see some rapid, fast changes depending on what happens in our economical structure, depending on what the feds come out and say. We can see rates all over the place. Make sure you're working with somebody who understands that and has policies in place to protect you. All right. Happy spring house hunting. It's time to go, guys. Let's get to work and make it happen. Any questions you have about this? I know it's kind of boring and it sucks. Just reach out to me and I'll explain it to you in your terms and in ways that it'll affect you guys. All right. Happy Monday. Let's kick butt this week.